Hello everybody! For those of you that have been following my videos, you will know that I was doing really quite well during the end of 2019. In about 2 months' time, I managed to get about 40% on my account. You can see in this graph right here. Then, during December, I took a couple weeks off just for the holidays. When I came back, I was really quite ambitious. So I started trading. I went, if you remember, I started November, October, I think it was, with about $500, which I then grew to about $700. And then in January, I started, starting over with $6,000, which is 12 times more what I was trading in the beginning. And let's just say the mental shock of that was too much. And I was worrying so much about generating returns that I wasn't thinking so clearly. And I was worrying so much that I fell into the trading psychology trap. Essentially, having a solid trade setup, the price moves against you a little bit, you cut it short, even though all the logic behind it is correct. Adding to a losing position because you're just kind of hoping that the market will turn around in your favor. And after a couple of losses, just changing your position size, pumping up the leverage, trying to claw back out of the hole, which essentially, if you're in that mindset, it only digs the hole deeper. So after a very stressful and very, let's say, unhappy January, my returns on that portfolio looked like this. And as you can see, towards the end is where it got really bad. So anyways, what I did is I took the money out, took a deep breath. I decided to take about a week just to watch pretty much every single video and resource that I could find online on trading psychology. Essentially take it as a hit, but as a lesson. After stabilizing and educating myself, I came back and I started again with a smaller account, bigger than before, but not as ambitious as in January. I start again with $1,000. It is the end of my first week trading with this new capital. I'm wearing red, as you can see, because I'm celebrating Valentine's Day. And I'm closing the week with a profit of about 4.5%, which looked like this. Let me walk you through it. Starting Monday, it was a relatively quiet day. I held a pound US dollar long for a couple of hours, but essentially it didn't really go anywhere, so I decided better to just close it. Tuesday was a good day because Monday, the coronavirus reported a smaller number than what had been being reported before. Essentially, this indicates that the coronavirus was, let's say, reaching its peak, because every day less and less reports. This resulted in a very risk-positive market for pretty much all of the Tuesday session. Risk-positive setting is very good for trading the Australian dollar against the yen, because the Australian dollar is a high beta currency and the yen is a safe haven. So going long on the Australian dollar versus the yen during a risk-on sentiment, it's a pretty clear trade as long as nothing happens to change the risk sentiment, which means you do have to stay on top of it, paying attention to what's happening in the markets. You can't really leave, right? Now, those risk sentiment trades were really quite clear on Tuesday, and they were the ones that we took right here, that you can see in the picture. On Tuesday evening, we had what was easily the biggest and easiest and clearest trade of the whole week, the interest rate decision and statement coming from the RBNZ. Now, in the currency research tab of the terminal, it was listed as the week's top trading opportunity. So going in there, we managed to know exactly what to look for, what kind of things to expect in order to know which trades to place. What we were looking for in the statement of the bank is for them to either downplay their positive economic indicators or the opposite, which would be to say, we are positive and the coronavirus is probably not a big deal. And what we got was them being very positive. And here's a video of that trade, specifically as it happened and how I took it using the squawk setting on the ForexSource terminal.
So unchanged, so RBNZ keeps the official cash rate unchanged as expected. RBNZ says employment is at or slightly above its maximum sustainable level, says overall impact of coronavirus on New Zealand will be of a short duration. In terms of the forecast, that they are revised to the upside.
That particular trade was great because it resulted in this about 2% jump that we see right here. Now, Wednesday we had in the morning, for me, some data coming out of the US, which was probably going to be the highest conviction trade opportunity for the day, which was the CPI data as well as the employment reports. But as you can see based on the screenshot right here, it was a relatively mixed report. There wasn't any clear trading opportunity, and the market really didn't react to this, so I didn't place a trade. Sometimes simply staying out can be much more profitable than just trading because you want to place a trade. Now, following the rather unimpressive CPI and jobs numbers from the US on Wednesday morning, the rest of the day had a similar theme of risk on. So again, I had placed several long positions in the Australian dollar against the yen, which is my go-to for risk sentiment, and managed to make some small profits during the day. Then towards the end of the afternoon, I just put some tight stops and limits on my trades that I had placed because, of course, anything can happen with risk sentiment while you're not watching. So I went and I was playing tennis, and suddenly my phone starts getting notifications, so I go check and it says that all of my stops had been hit. So of course I assumed something must have happened. I go into my phone, about 15,000 new cases of coronavirus reported when it had been going in a downtrend and was at about 2,000 per day. 15,000 is the biggest in a day by far to have ever happened, and it happened right as I was not paying attention. I see there's this huge candle going down, 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 and suddenly I get a notification of another buy order that I had forgotten to delete before leaving the office. So of course this is very bad. It activated a buy order which was completely against the sentiment, and very quickly that went down to the stop loss. So essentially pretty big hit, which was unexpected, and it was dumb, and it was my fault for not having deleted my pending order, which was risk dependent, while I was not here paying attention to what was happening to the market. And as you can see, that particular event took us from up here to down here in 5 minutes. So that was a mistake on my part and something that I will not do again in the future. Always remember to close your pending orders, kids, because they can and probably will screw you over. As a thought experiment, this is what my weekly result looks like right now, but this is what it would have looked like had I not made that mistake. Not great, not terrible, definitely could have done better. Then on Thursday, the risk off tone continued, and I just placed a couple trades just shorting the Australian dollar in favor of the yen. Again, shorting the high beta currency in favor of the safe haven. Basically just on the pullbacks, making a couple of profits, as you can see right here. Finally, that brings us to Friday. Today in the morning we had the retail sales coming from the US, which was pretty much exactly as the market expected, so not a real trading opportunity there. Anyways, I'm happy to be back. Thank you for watching. Again, if you have any questions, comments, or want me to make a video about anything, leave comments down below. I'll be sure to get back to them, and I will see you again next week.